All right. So I'm gonna go over the market in scale. Maybe the last thing we're gonna do is going to be our money in minutes. Okay. All right. So what the market has been doing is nonsense, it's consolidating. But I showed you guys two perspectives on gold yesterday. All right, but my strongest perspective, I'm gonna go over the market in scale. Maybe the last thing we're gonna do is going to be our money in minutes. Okay. All right. So, okay, good. So I perceive this week is going to do a lot of consolidation. The market is still consolidating. Okay. Different layer of consolidation is yet to move. All right. It's actually really, really, struggling with its movement. I may want to, yeah, if this wants to really pull down right now, I may want to, yeah, this is a week you want to be patient. Let the moves happen. So last week we had inflow. All right. Now we're having consolidation. Inflow. Okay, so inflow. So the market is consolidating right now. Is either it's going to make a decision to continue upward, create new highs, or it's just going to make decisions to come down. But right about now, it's trapped. Okay. Hence, any activity here right now is almost a gamble. Okay. So that is where S&P 500 is right now. It's neither a buy, the buy and the sell factor is not really that strong. Okay, that's S&P 500. I think the same thing goes with, yeah, this is I kill you in the market. Okay, you're buying me, I kill you. You're selling me, I kill you. All right, so it's not really, moving. It's still in that form of consolidation. Hence, I want to be patient. Okay, gold is doing the same thing structurally. I told you guys now, but I told you guys teeter towards the bullish structure. Okay, so gold is in a buy state already because it's above that. But inside of that, again, is creating a consolidation. But this move has already activated. It should be in gold right now. All right, this should be a trade on gold. If you want. So gold is probably the only trade, all right about now that looks sensible. That looks active for me. All right. Gold is already a buy. If you're not on gold right now, you can actually pick gold for a buy, or you want to wait for the break, which is, I believe, where is it? Okay, gold is just creating. Okay, so you either want to wait for the break of this structure to actually get in on gold. That's what I'll do on gold today. So it's either you are in on gold already or you're buying gold for price action. So if it's price action, you can buy gold or price action, or you can just, okay, let me wait for the confirmation. I buy gold. So this is a buy on gold. It's actually good. Buying above this area, all right, would be my short on, would be my, yeah, this would be my risk. Okay. And I can now go for, all right, I don't know if this is, so this is not based on, what's the next, I think gold is this the all-time high? I think. Okay, that's not the all-time high. But that's the previous day high. But because of price action influence, okay, you may want to, yeah, this could be the next proportion on gold. So this is what I'll do on gold. I'm trading price action, but I'm going to use the confirmation of snipe to get in. So, or you are already in on gold. So that is my take on gold. Okay, for this morning. All right, you're already in on gold. Yes, gold can, because of the consolidation factor, this is a bad risk. It's not too, this is a smart risk. But because of this nonsense of consolidation, you may actually want to protect yourself lower here. All right, yeah, because of this, it may actually just track, but it's already in the wave of, not until this market closes below this candle, this market is still, bullish. Sorry, below this candle, the market is still a bullish structure. So I like gold for the buy right now. Okay. So if you want to get off, just allow this. It's gonna move. So gold is a buy. If you want to even buy now, it's not bad because I actually activated this already. It's already in this trade. Okay, yeah, it came down, it's consolidating, but it's already in the trade. So that's gold. our rich pair. What other thing? I think we did yeah, GBP USD is still in a bullish state. This is actually a bullish move. Okay, break retest. This is a bullish move. If this is structurally a bullish move right about now. Okay. Uh, but what would I do? What would I do? Okay, because the market is in a state of consolidation. Let me see what 4 hour is. This market should buy. This is not really a bad trade for a buy. Let me see. From the smaller time frame perspective. Okay. So this is a break structural holding. Now, what I'm going to see in this trade, if market, it's a buy trade, it's already holding the buy form, but it's still no volume. All right. So one of the things I'm going to see GBP USD do today is if it snipes above structure. So I'm going to take the Asian structure. Yeah, I'm going to take this Asian structure. If it snipes above this, then it's gone bullish for today. All right. So that is something that I'm going to look out for on. So the snipe on GBP USD is going to be a healthy one. All right. And you can now go for the previous day high, which is, yeah. So this is good for a snipe. All right. If you want, snipe is good. Price action is good. GBP USD is in a position for buy. So this is what I'll do on GBP USD. Okay. Yeah, it's actually good for the buy. So if it snipes, good. Now, if he decides to snipe below and start selling, it's going to. Now, the sell for me, this is where it's selling to. It's not really too good. All right. Sell is not really too good, except I will take the sell as a break of structure, retest of structure. So that's how I'm going to treat GBP USD. I'm going to trade GBP USD as a price action trade. All right. Literally, that's what I feel I'm going to do. Snipe buy. Okay, let me just leave it at this noise. Snipe buy. Okay, price action sell. Now, I'm always doing this by calling for you guys. Sorry. I'm always doing something by calling for you guys what I am doing in the trade. Okay. So you guys understand how to manage your account, because the problem most of you have in trading, okay, you don't have a trading discipline, portfolio discipline. So, and see, trust me, that's really what makes the difference as a trader. Okay, your ability to manage your portfolio. So for every trade, you should have a basket. This, I'm telling you right now, GBP US is already doing, yeah, it's going to close this candle. It's going to close this candle. So I think we're going to have our first trade in GBP US at the break of this candle. Okay, so this looks good. Like I said, for price action, it's already a buy. So if you are someone who you have a GBP, if you have an account for it, you can actually buy it right now. Gold, you can actually buy it right now. But I'm just giving you a variation that if you are attaching sentiment, okay, to LBS, this is what you want to do on gold. Let it break above, okay, for you to enter. It means you are instructing yourself to be patient today and just wait for the move to happen. Okay, so there's a move that has already happened on gold. It's bullish, but it has fallen back into a consolidation. So it's either you want to, oh, I trust this move, it's already bullish, let me go bullish with it. Or, okay, since it's bullish, let me wait for a confirmation of entry for today, so that if it's going to continue bullish, let it continue on my term. All right. So that's how I treat trading. But at the end of the day, this is what I also want you guys to know is every account. So for gold right now, okay, What's my strike on gold? Let it break above. Simple. I'm sniping gold. When it breaks above, I'll join the bullish gold trade. Because the truth is, this trade can still consolidate between now and next week, Wednesday. Okay. To make a huge decision. All right. And you'll still be on that trade. There are trades, price action trades that you can be for a week. Like GBP, JPY sent to you guys that hit the target. It's probably a week trade. Okay. It takes time. But Snipe, the decisions we make in a day, we are executed, we are out. That's the beautiful thing about Snipe. Okay. It's just like binary option. You know, you come in a session, you get your activity for the day. It's really our trade lingers, like it lingers without hitting target. All right. It's rare. So, but price action can actually store hold. So that's what I want to do on gold. All right. It means if I'm taking this trade based on this narrative, I'm going to be taking it on my Gold Snipe account. Okay. If I'm taking this trade based on price action, it's going to be on my price action gold account. You don't take the both trade in one account if you're documenting, except you're not documenting, you're just a trader that is just copying trades and just trying to make money. All right, which is not an environment I want to encourage. Okay, be a disciplined trader that narrates the story of your trades. So you can come and say, oh, I'm wasting time on price action. I think I like more of the snipe action. That puts me in a state of patience. So you can documentation gives you reason to choose yourself as a trader. It's not about the wins, it's how you win, you declare. You decide, okay, how you're winning. So I'm always doing price action trade, okay? And I'm letting you know this is a price action trade. The narratives of price action are quite different from the narratives of Snipe. So how do I treat it? My account tells the story. So I don't come and, oh, Kenry says buy and it's a price action account. The parameters of the trade control differs on price action than on Snipe. So be disciplined to make sure, even if you don't have an account for it, you're learning that this is what I want to do, and you begin to prepare yourself. So you don't say, oh, I don't understand. Well, and guess what? When we're giving I document. So I can tell you at the end of the day, I can tell you price action made, we took how many price action trade, this was it. We took how many Snipe, this was it. So over time, as you're seeing the data pile up and you're seeing the profitability and the manageability of the trade, you begin to say, oh, this is how I can apply myself. I cannot get the understanding will make you. But if we're just calling trades and we're not documenting, trust me, you're not gonna enjoy trading. Am I making sense? All right. So this is something that so gold is strike, but I would also another way I'm going to enter gold. If I choose an entry, another way I'm going to get another entry on gold if it breaks and retests this again, that's another move. All right. So it's part of the things I want to talk about price action. Okay. Maybe after we finish this session. So that's gold. That's S&P 500. I did GBP USD. I already gave you guys GBP USD. Okay. If it snipes above, it's not sniped yet. So we're waiting for the snipe. Okay. So you can see it's rejecting. So 8 minutes, if it doesn't. So what we just need, that's the patient. That's one of the beautiful thing about Snipe, that first 15-minute break. It tells the story, all right? It tells the story, how the market begins, how it wants to play out. Will tell that break above or break below. It tells the story. And if you hold on to it, it's going to be fine, okay? EU yesterday was good, all right? It moved about 1 to 3. If not, yeah, 1 to 3. Okay, and it's back into a shape right now. I'm still in it, okay, but I'm totally just maybe 30% of my. I've hit exit one. I've exited partial profit, but I'm just still holding on for it for the data sake. What am I gonna do right now? Nothing on E. Okay. Man, look at this guy. I told you this is another pair that I don't want to play with on price action. GBP JPY. It moves crazy. Like it moves crazy. Okay, we're gonna come back to GBP JPY on price action. You guys have any question? Like I said, it's gonna be a practical class. Okay. Questions you've had before you want to ask in regards to Snipe, maybe price action or anything. You guys have any question, you guys can ask. I'm just layering the exposure. Okay. Then I'm going to give you guys a preview. So I've given you guys the trades I'm looking at gold. Okay. Gold. My action on gold is let it break above the Asian high. Let it break. I'm going to get in for a buy. That's gold. Okay. Let it break above this. That's gold. Okay. Now, if it breaks below this, that's a sell. So it's a buy and a sell. Okay. If it breaks below this, it's going to be a sell for me. Both has a one-to-one, so it's a good trade. Gold happens to be a good trade. So GBP USD. I'm only doing the snipe on the buy side, price action on the sell side. Yeah, the truth is the market breaks below this area, it's gonna attempt this. So hence, I'll just take a price action trade, okay, not a snipe trade on the sell. Okay, so this is my GBP USD buy. Let me give this. Yeah, the truth is this trade is really gonna start selling and not stalling if it breaks below. Okay, there's a change of character here. Yeah, market may come, yeah, then sell down. So, but what I want to do? Okay, so let's see. This is going to be a sell. I think the freedom of a sell is really going to be this. This will be totally free, better free. Okay. All right, but you start taking risk when the market is still in your range. So this will give us a range of entry. This is going to be my price action. All right. So that's German 30. Oh, that's a bad opening. This guy, that's what happens after some crazy consolidation. He just makes some crazy move. Okay, that's a bad range candle. Uh, I looked at US 30, right? US 30, US 30. Okay, US 30 wants to snipe for a sell. US 30, US 30. Previous day high. Thanks. Previous day low. So US 30. Hmm. The market is in a tricky, like, it's in a tricky state. So based off on price action, this is relevant. He played it, okay, played it, broke above, created this. Okay, previous floor, made a new ceiling. Nice, making a new floor. Market is in a bullish state. All right. Presently, our market is slightly bullish. So this is a floor. It's holding, he held it, it's in on top of a floor. It means bulls are in charge. The moment the market breaks here, all right, it falls into another floor range. But this is where I'd love. So this is a bullish market. All right. There's a bullish market structure here right now. This is a swing low that created a new high. There's a breakout structure. For market to really sell this trade, okay, it has to change this character. So there's a breakout structure, break back into what? The sell, break under this. All right, it's good. It means structurally it has broken structure. If it does this, it has changed character. That is when liquidity has changed to sell side liquidity. Okay, so my patience for this trade is I want to see market break structure. This is a change of character. May want to come back in. If you could hold this, all right, then market will start selling. All right, that is a breakout structure, a change of character. When that happens, okay, means market will sell. So hence, a snipe will not really be a good idea. Okay, on US 30, it's not, it will not be the, no, not really, okay, it will not be the best idea. Okay, let me put it in a plain way. Price action is going to determine this trade at the end of the day. Okay, so entering with a snipe above this region, okay, it's mistaught the trade. Yeah, well, I don't know what's gonna happen, all right? But what would I do, okay, if I want to trade this? If the market break structure, snipes, okay, I would wait for any retracement. If I see a 15-minute retracement hold, I'll get in on the snipe. It means I can decide to snipe, but I want to see a bit of price action. All right. So my today variation is going to be breakout structure, change of character. So a close below this low with 15 minutes, all right, put you in a very range of a good trade. So that is what I'll do. All right, it has to close. I'll have to sell below the change of character. So let's see how this goes. I'm going to be a little slow. When I see trades like this, majorly the market is in a stupid range. So I tend to be very careful, all right, when I am just paying attention to this. Okay. So if he decides to buy, it's very clean. So the buy side is good, all right? It's clean. If he buys, he just have to close above this structure. That is a free run. So if these buys is a free run, no, nothing. It's already bullish. So a snipe for a bullish, if the market is in a bullish state, so a bullish snipe, all right, is clean. But if he decides to go bearish, if a bullish market decides to go bearish and it snipes, it means those function of structure, change of character is very important when the market is not in your direction. Change of character is very, very important. Okay, you may not need a change of character if the market is already bullish. Okay, but if the market is bullish and you want to sell, you may need a change of character. It tells you the story. So price action or market structure tells you the story of the story before liquidity run. Okay, every other strategy is after liquidity run, but market structure with a combination of price action, the knowledge of price action in market structure happens before liquidity. Do you guys understand what I just said? Okay, break it down. So what is really the advantage? And I'm going to take this off my screen. If I go there right now, it'll take a while. So let me just give you guys this trade. And it's part of the things I actually wanted to share in price action. Okay. But let me just give this trade. So this is bullish. This is, there's even another thing I said I wanted to update you guys on based on risk. Risk is always the swing low before the break. Now, when I am doing analysis, I do analysis based on what I am seeing. So let's say this trade comes here, okay, now goes back and break. The swing low that caused the break of structure is your risk. Never forget this. This is something you want to record and keep. And you guys should take this clip and say, this is what Kenry says about. So anytime somebody is asking about risk, this is the yardstick for risk. Your risk is always the swing low, 15-minute swing low before your entry. Okay, so at this point in time, based on my analysis, this is the swing low. And the swing low, okay, if it's on the break, if you're using the first consideration candle, it's a swing low in the Asian session, not London, in the Asian session, except the market has broken those swing low and swing high in the London session before it snipes. You will now have to use the swing low, okay, or swing high of wherever. Case in point, there are situations where market is going to break this. All right. So let's say the market is not broken structure. So it breaks this, okay, and activated the sell, but rejected and it's coming back. Okay. What risk do you use? It is not the Asian session low anymore because why? A new low has been created, and if it happens to break structure, that makes it a swing low. So you always use the new low, the new swing low of every trade. For every entry, the swing low before the entry for a buy. All right, the swing low, the swing high before the entry for a sell. So if I'm going to sell right now in the Asian session, this is a swing high, but it's not in the Asian session. Hence, this is my what? Swing high. It has to be the one in the Asian session. Am I making sense? You guys get it right now. Put top tap on the chart. All right. You're good. So it is not this is outside of Asian. This is in Asian. So this is the swing high. If a break or structure happens, like this becomes a swing high in the Asian session. This is also a swing high. Okay, but it's not in the Asian session. So this is what you use as your parameters for risk. So if it breaks below this area, this becomes a risk. Now, because I am doing this, this is going to be my buy. This is the swing low. If it breaks this right now, this becomes a swing low. This is Asian session swing low. This is also swing low. Okay, but this was the immediate one. So it's always the immediate one. All right, before the break of structure. Does that make sense? Good sense. Okay. Hmm. So hence, if I'm going to use a risk for this trade, it's going to be here. Okay, and our target is going to be here. I'm going to send it. All right, good. So I was trying to explain something. What was I trying to explain before? I said I wanted to explain. I was explaining something, and I know I wanted to go deeper before I said, let me. What was it? If you guys don't remember, it's freedom for me. Is I know you don't trade NAS. Okay, so I was talking about market structure. Okay, and price action, something that happens before liquidity and after that leaves liquidity. Okay, good. I'm coming to that. Okay, Chris says, I know you don't trade NAS. Can you take a quick look? Absolutely. So NAS is in the same structure, is looking the same structure as US30. Okay, so I'll clean this right now. Investigate Kenry. So what you just told me is to investigate. What is the state of this market right now? It's bullish in nature. Okay. So there's breakout structure, there's breakout structure, there's breakout structure. Hence, we have what? A swing low here. Okay. So where's my previous day high? This is my previous day high. and this is my previous day low. Market is in a state of consolidation. Now, if you decide to buy this market, it has to break above this area. Hence, you're going to have your trade. When you break above this area, it has broken structure. Market is already slightly in a bullish state. All right. If it breaks above, this becomes your target. Okay. And the question is, will this be a value or risk? So this becomes your risk if it breaks above. All right. Yeah, it could reach this. Okay. Now, if it decides to sell, it has to snipe and break the structure. Because why? Structurally, the market is bullish. A good sell trade, a change of market structure shift has to align with you. If you trade an opposite trend without a shift, it is what was the word? It's not, the word is not gambling. It is you trading impulse. Okay, your trading consideration is not firm. Okay. Buy the market when it's on discount, sell when it's on premium. Market is on premium right now, but the trend is not bearish yet. So for you to get in line, you can now wait for market confirmation for a shift to initiate the trend. So what initiates the trend of a bearish market on premium is what? A change of character, market structure shift. Yes, the market will sell. The market can sell. If it breaks, it can sell. Okay. But it will sell better when it has changed character. So that confirmation is always good. It's a variation you guys want to start adding. All right. This is one of the things I told you guys about what I want to do in 2026. Okay. A change of character initiates an opposite side of liquidity, whether on a 15 minutes, whether on a 1 hour. All right. So the market is bullish. This is a slightly bullish market structure on the lower time frame. Okay. Now, if the market is going to shift to the other side and start initiating change of character, will just happen. When change of character happens, boom, it means market structure has shifted. And the structure has shifted, liquidity falling. So structure is almost like foundation. Okay, the moment you lay a foundation, boom, building starts happening. Okay, so it is so those who build the market build on structure. So you that is trading liquidity, retail trader, just see the structure that is on. So if it's a bullish market structure and the market is in premium, you hot on buys, okay, and you begin to wait for shift to sell. Because right now, market is on premium on indices. Market is in all-time scale indices. Okay, no. This is NAS. I'm on NAS. Okay, but for other this, I think they are on premium. But even here is premium because why? This is high liquidity. Here is premium. Here is premium. Okay, here is premium. For this range, here was premium. Okay, for this range, here is premium. So market is slightly in a premium, not on a discount. Okay. Yes, it can buy to this area. This is highly premium. So if market is getting here, I should now be waiting for what? Market structure shift. If I want to sell, before I want to sell, I want to see market structure shift. So I could either see it in a smaller time frame. I could either see it on 1 hour for deeper move or see it on 4 hour, depending on the range. Okay. So, but as it is right now, because market is slightly consolidating, but it's bullish. So first I established that this is a bullish market structure on the smaller time frame. Because why? This is what? Higher lows. It's creating higher lows, break of structure, higher lows, break of structure. So it's done this. Okay. Now, if it decides to say, I'll just wait that structure, okay, that created this new high. That's what we call a change of character. When that happens and it's not, it's in your favor. It means market shifted before you sold. All right. Does that make sense? Or it may not be proper strategy for market structure shift because in a market structure shift kind of strategy, this is what happens. Okay. It's a bullish market structure. It's a breakout structure. A bullish market structure, okay? There is no bullish market structure if you do not have at least two, okay? Breakout structure and two higher lows, okay? So this is swing low, this swing low. What makes it a swing low? A swing low, okay, is a low that has taken a previous high, a breakout structure. So this is swing low. If it does not, All right. It is not yet a swing low. Okay. So when this happens, this is a bullish market structure. Now, so let's say this has been continuing. You want to sell. The market is on premium and you decide to sell. This is the most valid point that determines the sell. When this happens, it means market has shifted. This is what causes what a market structure shift. So it's called what? A change of character. When market closes below this, it is called what? A change of character. Now, that doesn't tell the whole story. It just initiates the idea that market is shifting. It's just trying to shift now. Okay. Now, for it to shift market structure, so there is market structure shift. There is change of character. So change of character initiates market structure shift. So a bearish, where is it shifting to? A bearish market structure. A bearish market structure is not established, okay, if the foundation is not created. So now this is a change of character. This is a new high. It's just started. There has to be two lower break of structure, a new one break of structure. There has to be two. So the change of character and this one initiates this, but there has to be two lower highs. Does that make sense? Okay. The moment this happens, okay, you can dive in on the trade because why? It has already established market structure. So there are two things I just showed you guys on this. The difference between a change of character, okay, and a market structure shift. Are you guys with me? Put 10 on the chat. I didn't say, did you guys understand? Are you with me? It means, oh, you are looking at the idea and it's interesting for you to journey in, all right? On experience mode. Are you guys with me? If you got to 67, you're amazing, all right? So this is what a lot of people don't understand. The strategy of a market structure shift, okay, is different from trading a market structure idea. Now, if I want to trade market structure, my strategy is not built on the shift. It is built on the structure. So some people build strategy on the shift. What is that strategy? I'll show you guys right now. But you guys don't establish. A bullish market structure has to, a structure, whether bullish or bearish, consists of two things are important in a structure. So if it is bullish market structure, you have what? Two higher lows, okay, and two break of structure. It's as simple as that. When that happens, it means the structure has been established, but there is no strategy yet. Strategy is how you trade it. You guys get what I'm saying, all right? So how do you enter when this happens? So a trade, a market structure trade is divided into three waves. Write this down. I never actually thought I was going to do this. Let me just do this, all right? It's divided into three waves, right? I'll break it down. Wave one, okay? The consideration move, okay? Wave two, pattern. No. Okay, let me just break it like this. Three waves. So there are three in three. I'm trying to be basic. I'm trying to be basic. So the basic part of me just get that. So it is three waves. So the three waves are in like this, all right? Let me do it and I'll explain it. So this is wave one. This is wave two, okay? And wave three is the signal wave. Where do you enter after the structure has been established? That is wave three. Wave one is to give you consideration. It means the break of structure has happened first wave, first swing. So first wave is what? First swing low. Second wave is what? Second swing low, break of structure. Now the third wave is the signal wave. All right. So the signal wave has to come back into selection. See, that is going to take this or take this. So when market comes here, all right, this could be continuation. This is the third wave is always the signal wave. Okay, so but there are two phases of the third wave. It may either come to this or it's going to come to this. Best is this. All right, so this is where you get your strategy. So the strategy is your entry of, so if it comes here, I take it, or if it comes here, I take it. So this is a market structure trade idea. Are you guys with me? You got this with 100 on chat. This is a market structure trade idea. I'm going to give you a market structure shift idea. It's different, slightly different. And a market structure shift idea can also have a market structure trade idea. So, but there is a difference. Am I losing anyone? Are you guys with me? Okay, so I want to know you guys are with me. All right, beautiful. Now, do you know which is going to say no? This is where your division of both of them are the strategy point, but you don't know which is going to move. So hence you build a risk, is where your money management comes in. So whenever this happens, you can take a trade here. Okay, your risk is always the lower. Now, for the full concept of the market structure sheet, the reason a lot of people don't take market structure sheet trades, or they like to break it into smaller time frame and just have a fraction of, they rather trade market structure shift concept, is because of the risk involved. You are supposed to take the foundation. The foundation of the market structure is supposed to be your risk. Henry, what does that mean? Okay. The first wave low is supposed to be your risk. All right. Because that's the foundation. Market can actually come back here, take this away, okay, and hold this. The valid point of risk is always the swing low. But in smart trading, people always use the concept of the nest. So you are going to decide. Overall market structure, the risk is supposed to be the foundation, where the structure started from. That's where your risk starts from. Okay, now you now go one to one. Does that make sense? When you do this, you're always protected. You can stay in the trade. You don't have to watch the trade. But when you do this, you watch your trade, because you can take this out and go your way. You can take this out. Market always takes. You know why? You can take this out because they know people always use this concept of swing low. So liquidity will come and drive this out, but liquidity doesn't, or after the market has shifted, it is very rare. Out of 10 market structure shift trades, it is very rare for you to see, okay, the third wave does not do the risk, does not pay off before it comes to take the liquidity. You will not see more than 3 trades in, and I can show you guys. All right. Out of 10 trades, 7 out of 10 will distribute before it will come and take away. 7 out of 10. Okay. So hence, I try to tell people risk is a very valuable part. So what you do is, this is safe trading. It's not about how many pips you made. It is how safe your entry is. Okay. And how safe you will be in the market, even when the market is going up and down. Okay. So this will be an entry. It means if you entered here, okay, you have more leverage. You make more money when you enter the lower side. But sometimes the market doesn't come here. So you enter here and you enter here. Okay. Simple. Does this make sense? So this is for market structure. This is a market structure idea. This is the risk. So the risk is the foundation. Before the first break of structure, that is the risk. So I've given you guys risk, I've given you guys structure, and I've given you guys strategy. Do you guys get it? On market structure. So what comprises of market structure? A bullish market structure needs to have 2 break of structure and needs to have 2 swing lows. When that happens, it initiates room for strategy. Where is the strategy entry? You know, I told you guys in price action, market will tend to buy the previous ceiling of an uptrend. So this is a ceiling. This is a ceiling. Why is it an uptrend? It's now a bullish market structure. So those 2 areas has given you. Okay. Now, Henry, are there other areas of it? Now, people trying to reduce their risk with NASO and want to use smart money concept. order block. Okay, so for every momentum candle that breaks, the beginning of it is called an order block. So some people say because they want to reduce risk, they would want the market to come back into this order block. They would take it, okay, and they will use this same area as entry, reducing. So that's the act of reducing risk. For me, plain blank, it's a gamble. Because why? What's a gamble? Are you guys with me? A gamble is you understanding the state of a market and you're trying to outsmart it, not because of what it has done, because of a proposition of what you think it will do. So you're smart, but you are smart based on what you think you can do. So it's more of a gamble, okay, than it's really a reality. What is a reality? I want to buy land. I want to buy a home. I see the foundation being built. I could tell what structure wants to happen if I see the foundation. Is that a gamble? If you see the structure, okay, and you see the foundation, you say, okay, this could take a three-story building. But imagine you see some shallow structure and you're hoping that you want to smart, if they do it this way, they can put three-story. You are the one telling what can happen. You've built strategy to tell, based on you've done it, it works. It's not that it doesn't work. If you can master it, it works, but it's still in the hype. It still falls in the category of, okay, I'll tell you one thing. Every reality can be documented with a statistic. There are certain things you do. I can show you 10 order block. There's no way I would tell you this order block. If you see this particular order block, it will always work. There is no way in the market. True or true? There is no way in the market. So people will tell you about fair value gap. You can't document fair value gap. That the market break structure to come. There may be three fair value gap. As candles are moving, and it's a variation. It's based on candles. Okay. You may have a 15 minutes fair value gap, but it's not there on 1 hour. The candle will just move on 1 hour like nothing, but you are there on 15 minutes. So it's just, that's why they call it the smart money concept. People trying to be smart in the fast race, trying to outsmart the market. It's a good, if you can master it, it pays very well. But the foundation, it's not strong. It's not documented. It doesn't bring, you have to be watching the market. You have to be, you have to, there's no, you don't have a station. Are you guys with me? Okay, but if I do 10 trades, the moment I see bullish market, the moment the market does bullish market, so whether on a 15-minute, 1 hour, 5, the moment it establishes a bullish market structure, if I initiate my strategy, it's the same way. I can say I can show you 10 trades right now. I can backtest 10 trades telling you about market structure, telling the story of market structure. But I can't backtest the trade telling the story of market structure shift with order block and no. I can't. And if I cannot do it, I cannot retain it. If I cannot retain it, I cannot duplicate it. Are you guys seeing the challenge with all this concept of learning? Okay. This concept bringing noise, it takes you out of control. Not that they are not good, but the phase it falls in is more of the gambling. All right. It's like you found a loophole in the market and you are taking, and guess what? The people who control liquidity know that's how you're doing. All right. So are you guys with me? Am I educating you guys today? So what's the next thing I want to do? Should I do it? I want to now show you the difference between market structure and market structure shift. Should I leave it for another class next week? Or you guys want to? Is it not crowded? Am I not overcrowding you? Okay, but I'll just give you. We're gonna play more. And guess what? You think you've learned it? No. You're just experiencing the awareness, knowing it in real-time practice. There's processing knowledge. Now, this is knowledge, but being able to process it takes a higher tier. Okay. which I am willing to go with you guys. So I'm just giving you documentation of a process, structural process of market structure. All right. How it is on candles, how it is on how you make decision, which particular candle, it's a little different. Okay. Now, what is a market structure shift? A market structure, a bullish market structure, okay, is the foundation. A market structure shift can be anywhere. Okay. So first is this is the foundation. This is what starts it. And this is how to trade it. Now, a market structure shift is whether, let me use this. It could be anywhere. So let's say the market is going up. All right. This is a bullish structure already. Okay. Now, this changes. This is a change of character. It has shifted. Okay. Now, this is a previous high. If this market comes, shift and comes back. So what determines a market structure shift strategy is when it changes character and it comes back and fill in the gap. So it could either retest this and sell. So this is a structure and this is a structure. So if a market comes here, retest this is the sell. This is where you sell, or this is where you sell. So why are you selling? You're selling because the market has shifted and you want to stay. So you're anticipating that now that it has shifted, okay, it's going to sell. So you are coming in before the structure is built. Are you guys getting different now? So now, bearish market structure, it has to do this, break or structure. It has changed character, it has broken structure. I'm not in till two break or structures. I can take this or I can take this. That is market structure trade idea. Okay, but market structure shift, okay, is the moment it changes character, that is the confirmation for you to look for strategy. So what's your strategy? The moment it changes character, it can come back into this previous structure, or as the market was coming down. So sometimes market can go, okay, like this, there's change character. This becomes what? A structure. Okay. So what do? I can wait, come back in, voila. So my entry is after a change of character. That is market structure shift. But market structure idea, my entry is after, okay, the market creates two break of structure, two previous swing high. So I'll enter after the structure has been created. But market structure shift, I will enter before. My entry is not based on the structure. Entry is based on the character. Good. All right. So a market structure shift idea is on character, while market structure structure trade is on structure. Does that make sense? Do you guys find the difference now? Okay, put 100 if you clearly get it. 100. Okay. So one is going first, anticipating the move, because after every change of character, market tends to a high probability. But the patience of seeing the structure before you trade takes you a different layer. Okay. So, and it's independent of, so market structure sheet idea, you can have in a day, okay, 10 shifts, depending on time frame. Okay. But in a month, even in a smaller time frame, you rarely see a structure. All right, established. And so it takes more patience. But after it happens, it drives. Okay, so let me give you guys a scope right now. So Kenry, I'm on 15 minutes right now. So Kenry, let's just talk about this. So this is wave one. Now there are other variation, but I'm just trying to give you guys a structure. There's a breakout structure. Okay, this is wave two. Break of structure. All right. Excuse me. There's a break of structure. So when this happens, now I want to show you the difference. Okay. In this, so this is a bearish market structure established because why? This broke structure again. All right. This broke structure. Now, a market structure idea is going to be based on when market comes back into this or into this. That is a complete. If it enters, boom, that's a trade. But guess what? This market did not fulfill that. But after a bullish market structure, so your strategy is different from the structure, your strategy of entry. So this is one strategy of entry. Okay, it didn't come. It means you would have missed out on the trade. But guess what? What's the third wave? So this is wave one, wave two. And you see that on wave three, look at how the market moved. Look at how the market moved. Wave three initiate distribution. Are you guys with me now? All right. Boom. So Kenry, you just did that too. So what is a market structure shift in this same particular one? All right. So this is market structure, bullish with three. Now, for this time frame, the high. So we could do now selectively. Now watch this. This is one of the things I was trying to tell you guys. Okay. So this is what? A swing high. But I'd rather this is actually good. If you watch this, this is good. Depending on what, if it's very selected, this is it. This is a change of character, fam. The moment the market breaks and change character, what happens? Voila. So this is a market structure shift trade. So if you're doing a market structure shift, okay, guess what? Boom, you are in this trade. Because why? This is where it changed character, break of structure, created a new low. Voila. When it did it, broke it, retested it, voila, it moved. Okay. Are you guys with me now? Someone say, oh, Kenry, what if you'd selected this? You'd have missed out. So this is also, because I'm on 15-minute time frame, all right? This broke structure, what would make this one a swing high is when you see, so this is, I need you guys to consider moves. So this is a move, and there is a break or structure. If you really look at this, okay, it's not really clear, but if we shift time frame, you begin to see. So this is also what? A swing high. So the moment market takes this area away, okay, you can now wait for, okay, but you see that because it is not too smart, market didn't respond, didn't hold, but this was clear, all right? Even this one was clear. If it's this one you did, you also even got a trade, all right? So that's the difference between, so for a market structure idea, you will not get a trade on this one, but for market structure sheet, you can see simple. And the reason people like to, and why this is also good is it is happening on top of what? A bullish structure. So the confirmation is strong because why? The trade you are taking has already established a bullish market structure. So you see confirmation. The moment that happened, look at boom, voila, it just moved. Put on 100 if you got a better insight on price action and market structure too. But more of market structure. Okay. These things I'm teaching you guys. You guys don't know the value of what I'm teaching you guys. If you guys can hold on, you can tell yourself, calm down, and let me respect structures in the market. Let me respect the definition of price. You'll become more of a better trader. You will become more of a risk taker. Many of you take risk without confidence because why? You do not understand structures and you do not data your market. These are things that are going to help you with data, and it's coming to you free, and you guys don't know the advantage of it. All right. So any question? I could show you 10 trades. Maybe some sessions we just have. I'll show you 10 waves. So any trade that moves, okay, in liquidity very, very well, you want to check it. You're going to find structures in it. All right. In it, every distribution. So you see this type of distribution. Okay. You see this type of distribution. You go to the top of it, you'll see you're going to find structure, market structure. Okay. You're going to find market structure. You're going to find market structure shift. At this point in time, this market shifted. It went back into structure. It's so simple. Okay. This is previous structure. Okay. This was the change of character. The moment market changed character, it's either it comes here. So this is first entry. Voila. You have made money. So market structure shifts are initiated to just make money. The moment you can see how smart it is. Okay. This is it. This is when the market shifted because this is a swing high. This is what? Swing low. This is break of structure. So this is where the market changed character. The moment it changed character, what do? You wait, let it come. Is either it comes to this structure or you take this structure. If you are taking this structure, guess what? And you did one-to-one. So this is it. This would have been your risk, swing low, and your target will be one-to-one. Did you get out? This week gave you the trade. So market structure shift idea, they are not for long-term trade. They are just smart moves. Okay. But why you did that smart move? Someone was being patient, waiting for market structure. Okay. Because now market structure defines where is this trade coming from? It's coming from here. So I want to see market structure established so I can take at least 50% or I can take this. Okay. Did the trade get it eventually? Yes. Okay. But look at what happened. The story. Let's tell the story. So this is a high. This is what? Voila. There is a break of structure. This is one. This is another one. Okay. There's another break of structure. Two break of structure, change of character, two swing highs. Trade as well. So the moment this candle came back down, where did it go to? The previous break of structure. Can you see this? You got your trade here. Imagine you getting into this trade. Excuse me. Are you guys with me? Are you seeing this? So this is one wave. This is two wave. There's a break of structure here because it took this out. And guess where did it come? So it's either going to be this, which is the first wave, or it's going to be this. Did the market respected? Yes or yes? So where did I tell you that it's going to be your risk? The roof of it. This, okay? Now, if you take it to 50% of that range, so this is a range. This is a range. 50% will be what? At least somewhere here. What do you have? That's a 1 to 4. And it happened in less than 24 hours. For indices, is fast. It happened in less than, this move, boom, less than. So you can see that the third wave, look at how wave one, wave two consolidable, third wave. Okay. And it distributed the whole liquidity. Are you guys with me? You guys you're saying this. So let's look at this move. So sometimes now I'm giving you guys a yardstick for documentation. All right. So this is a point of interest. Market got here. Okay. So this is wave one. I just want you guys to see, all right, how market structure plays out. Okay. When you look at this, right, I'm on a 15-minute time frame, it's different. Okay. When I look at other time frames, but I'm just trying in every time frame it plays out. So this is the low. This is the first high. Sorry, let me use this. There's a break of structure. There's a break of structure. So this is our wave two. Market structure has been established. Okay. Market structure has been established. Change of character has been established. Okay. What do you need for market to break? All right. It will either come back to this. So what's this? So this is a break. Okay. Since it's still here, this is too short. We didn't get this. So you allow market to come back to this. What happened here? So this was the first structure. What's this? This is it. Look at, voila. Your risk will be what? This low. Did you get what? If you check between here and here, over 1-to-1. There is no way a market structure will establish out of 10. Okay, 7 will play out. 1-to-1 is not even a yardstick, but at least you will get. Now, if it based on the range, we work based on range. So if we're looking for, so this is a bullish market range. So the moment the market liquidated that, it means your target is here. If you always check that, did the market fulfill its target? Yes. When it did that, it gave you 1-to-1. So it's a blessing, guys. All right, it's a blessing to understand market structure. If you check every liquidity that moves over 150 pips in Forex, okay, over 300 pips in indices, go check the foundation. You will see clearly, all right, a bullish market structure and a bearish market structure. It's all in the detail. You will see it if you look at it. All right. If you see this move that equates this, so first is range. So like I told you guys, I'm only giving you now the structural side of it. Okay. What makes the decision of market structure trading strategy powerful is the consideration of position. At the end of the day, I tell you, every of my strategy is built on position, all right, strategy, then risk. So we're playing more of the strategy, the definition of the strategy, but there is position. Before I want to trade any bullish market structure, what's the position of the range I want to trade? So every trading has a range. Every buy and sell has a range. Understanding or attaching range to your trading. So I know that if I decide to buy right now, this is the range I'm buying. So these are things that makes your trading clear. Any question? That's about my time. I've deposited. Were you guys, did you guys enjoy the market structure insight today? When if you feel calmer that oh, this was something I was missing out. I kind of like it. I kind of like the fact if I introduce this into my trading, I'm going to be more patient. I'm going to be more peaceful. You see, gambling is enticing. It pays more sometimes, but sustainability is not built from gambling. Time will tell. Okay. If you could add the feature. So even in every strategy, I am intuitive. Okay, that's what I'm telling you. A piece of change of character into London Breaker Sniper could change your game. Okay. I want you guys to be in control. It makes it better. So you guys tell me about what you've learned. Tell me how you feel about what you've learned. I would like to hear, if I can hear from every one of you, fine. I'm going to stop recording right now. Let me stop the recording. What's the time? 10:14. Okay. I can record for the next 15 minutes. I need you guys to tell, oh, you can unmute yourself. Just tell me, see, this is another thing I want you guys to know about learning. I want you guys to know about learning. Learning is not, there are decisions you cannot take. Okay, so let me give you guys a principle in learning that you have to use in your learning. The principle of what begins and what stops. Okay. In the beginning of every reality, there is a word, there is a confession, there is a word. Many of you make decisions without proclamations, without words. You make decisions on your thought, but the principle of making your thought a reality are through words. So I am training you right now. I'm giving you foundation for learning. If all your decisions are ideas and thoughts, okay, and you go into action without words, you are gambling. You see where you can never replace a one-to-one mentorship with a public training. You know why? A one-to-one mentorship fulfills the print, because if I am doing training one-to-one, after I teach you right, I'm going to give you assignment, I'll ask you a question. We will communicate. You see, that is initiating. Anything you say in understanding, if you declare your understanding right about now in words and it can be heard, it's a faith comes by hearing, not thinking. And every reality, say through faith, everything was framed. See, that your 6 figure is framed through faith. And faith comes by hearing. It means there has to be words. Many of you don't talk. You don't speak. You are a shadow of your own reality. You are avoiding principles. See, building blocks of lives, they are not in the physical terrain. Okay. It must come from you aligning with principles and laws, essence. So that's why you see me most times. I train you and I ask you questions. All I'm doing, I'm creating a foundation for your declaration. Okay, what do you think about this training? It's in your head, but you've not created it. Everything that will begin, everything that will stop, will start with your word. And if it can be heard, faith comes from your own words. So that's it. There's no relationship. There's no reality without communication. Let me tell you. See, and God said, let us build man in our own image. How many of you know that scripture? God is the creator of all things. He needs no permission from anybody. But the scripture made us understand a principle of God. Before creation, he worded it. Say, and let us build man in our own image and likeness. He discussed it. He discussed his thought before action. You know, I've always told you guys that the people have had a major impact in it are not the people I train. They are people I communicate with. And the best, see, for 2 years, I was struggling with my results. I've been on that mentorship, but I was struggling. Just a training happened. And I called my mentor, December 2019, moving into the new year. I called my mentor and we had a discussion. 3 months later, everything I lost in 2 years, made everything back over 300%, close to about 400% within a space of 3 months. You think it's a coincidence? Many of you don't know that. See, the prison many of you are blocked in the prison of, there's a programming. You have been separated from reality by reality. Because the reality of this world had programmed you and separated you from the reality, your own reality. So many of you, you do not really pay attention to the principles of life. You just pay attention to the participation of life. You just do things. You're just in a race without understanding that everything has a building block. There's a blueprint for your life. If you follow that blueprint, principally and essentially, everything on the physical will align. You are trying to create reality with tactics and strategies, and you're struggling and you don't know why. Principles. So sometimes I feel I'm struggling, maybe because you guys don't understand my type of person. Okay, I'm a coach that teaches by principles. I've moved from that environment of tactics. I know. So guess what? I just gave you guys a training, right? This training is based on the principle of the market, not strategy. How many of you understand? It's a principle of liquidity. What's the principle? I think there's a scripture that says there's no foundation. Talks about foundation. I think there are about 2 scriptures. You guys know the scripture, right? That talks about where the builders, when wind comes, it will blow it away. Firm, build on the rock. All right, I'm just trying to overview. Okay, some people build on sand, while some people build on rock. What is the rock? The principle of the word. When you build on the principle of the word. So everything I try to do, I'm principle oriented. My trading style is principle. Yes, it's strategy, tactics, but what's the principle of liquidity? I decide, okay, I'm not the one determining liquidity, but I understand the principle of life. For every great building, there's a foundation. So I focus on foundation. If you apply that, it gets better. And for all those who apply it, it gets better. You can't beat that. Okay, but it's difficult though. It's difficult with all of the noise. Okay, and guess what? Yeah, it's hard. Do you know that if you're trading market structure in a month, okay, range in a month, you may find 2 to 4 trades in a month. But now it's better on indices. Indices can make it. Indices, sometimes you may get 6, 7 that sometimes the market will play out. depending on the range you're trading, okay? And depending on time frame. If you go 15 minutes, if you're smart on 15 minutes, you see more trades, okay, on the slower time frame. But if you're really, okay, want to be patient and out of the noise, okay, 1 hour, 4 hour, okay? So
Good morning.
go ahead.
Yeah, yeah, good morning, everyone. Good morning, coach.
Good morning.
Um, First of all, thank you, and I really appreciate this session. It's been such my more enlightening. I actually want to ask a question about the market structure shift. Um,
Okay.
can can it be done? Can it be done on a lower time frame, like 5 minutes, or higher time frame? Because I hear that lower time frames usually makes too much noise. Like, I don't know, can it be done on a lower time frame or higher time frame?
Beautiful question. That question did not come from the session. It came from what you thought you knew. Did that question come from this session? Just relax. All
Okay,
right.
so
Did the question come from this session?
yes, about the market structure shift.
What time frame did I use to analyze?
I didn't notice.
The question didn't come from the session. It came from what you knew, the idea that has been sold to you, because you mentioned it. I heard that 15 minutes is a noise. If it came from this session, you would have realized that I did everything I did on the 15 minutes. And I've mentioned it. It works. Market structure works on even lower time frame. Didn't I say that? For the rest of you on the call. And I even did it on the 15 minutes. Okay. So you see, there's always a conflict with what you know. Subconsciously, you are programmed in the direction of what is in here. So even as I'm doing this right now, there's a frame. See, so knowledge is contesting prevalence. What prevails? What prevails? But it's a good thing you asked. Okay, I just pointed in the right direction. Okay, you can do 15 minutes. Like I just even mentioned, even before you asked this one. So you were already programmed to ask that question. Because before you ask that question, I even mentioned, except you guys are not listening well, I mentioned that if you're doing market structure trade 4 in a month, but if you're doing on a 15-minute time frame, you can see 7. Did I mention that? All right. So it's not really about time frame. So the thing about time, so let me answer what the concept, what you asked, the question you asked. That's why I said it's a beautiful question. So the speed of activity increases in a smaller time frame, but is less noise on the higher time frame. But the consequences of the higher time frame is more patient, which is something a lot of traders don't have. So it's not that it's better on a smaller time frame. It's just smarter and quicker. If you can master the smaller time frame and you have the patience for it. Because some people don't have the patience for it. That's why they do smaller time frame. So the difference is just patient. And the advantage for the higher time frame is stronger and it moves deeper. But it takes patience. Does that make sense? It's the GBP smart. GBP sniped already. All right. Those are my traders. They are looking at the market while they are learning. I hope you're not distracted. So let's go to GBP USD. It's bullish snipe or bearish? Okay, so there's already a snipe. You guys are already in, right? God, this guy's he's dancing out. That was a good snipe, though. Okay, let me take it. Let me take it. If I take it there right now, we actually get 1-on-1. Oh, yeah, I still get it's not bad. I'm already late though, but it's good. How many pips? Wow, that's some good long. Okay. So go ourselves more currency trade. Good far. How about the gold is not broken? I give you guys yesterday as well. Yesterday is not broken. S&P 500. Didn't I do S&P 500? What did I do in S&P 500? Okay, I trapped S&P 500. So I didn't do anything in. But if this guy breaks above, hold on, guy. This is the range. If this breaks above, this becomes a low. This is also a good trade now. This is holding out this range. This break above. I think there should be a one-to-one in this trade now. If it breaks above, there should be a sharp one-to-one now. Come on. Yes, there is now. There is S&P 500 is still valid if it breaks above. Yeah, the overall scale is, if it breaks above, it's good. If it breaks, now the only challenge is, this is a bullish market structure. For it to break for a sell, it has to change character. Okay, for you to not be trapped in a noise, it has to break below this. I would want it to break below this, and I'll sell. If that gives me one-to-one, I'll sell when it breaks below here. Okay, I don't know if I'll get a one-to-one. It does. It does. So it's not bad. Okay, it's not bad. I'll drop this. Good. All right. So I got S&P 500 as well. All right. Let me stop recording. So we were on it. We were on the discussion, right? I know. No, 30 minutes is not higher time frame. Higher time frame starts from 1 hour. Actually, 4 hours. But 1 hour initiates higher time frame. That depends on the concept you're looking at it from. Okay. So, ladies and gentlemen, since none of you wants to speak. I asked if you guys talk. You guys don't talk. All right. Where is this? Wasn't I recording? Did I stop recording already?